9:45 a.m. in London when we're doing this market update here on Investing Cube's homepage, and as well on the ATFX YouTube channel. We're gonna look at the markets. We're finally starting to get some action in the markets, and the euro dollar's up quite a bit, and we're gonna talk about that, of course. Before we start though, it's always need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. As well, I'm going to share you guys with my outlook on the markets and tell you pretty much where I think people are going to be buying and selling. But even though I've been doing this for many years and I'm good and profitable in what I'm doing, doesn't necessarily mean that all ideas are going to work out perfect. Okay, we'll begin with the euro, and we're looking right now at a very nice strong correction. Honestly, a bit too much really, but the trend for now remains in a downtrend. We remain below the trend defining level of 111.01 as well, and we pushed upwards, right? So yesterday, when you see the market rallying strong like this one, it's always good to take a little bit of a step back, especially if you know there's some important data coming up. So on the 1 hour, you only had bullish candles up until 5 p.m. and this is after this sign of reversal candle. So when it goes straight up to the sell zone and you're watching your screens, it's always better to, not always better, but usually it's good to wait a bit unless there's some important data coming up, because then we can usually take a position on, so we don't sell at the first level. Rather, I would have waited and sold where we are right now at 10,076, because with the trend remaining bearish, the risk reward ratio is favoring the bearish right now. We would sell right now, put a stop loss above the high. We'll risk about 23 pip to hopefully make 84. That's at 3.58 times risk reward ratio, which is not a bad ratio. The reason why it's so good though is just because we are close to this high here, and as long as you do, and we could potentially get stopped out, and no one really knows with any certainty what the next trade is going to bring about. So what people do is that they forget about the next trade and they just say, let's see what happens over the next 100 trades. And that's the key to success here, not really worrying too much about one single individual trade, but really be able to trade 100 times. And even if you would have win loss, that shouldn't really sort of cause you to have a massive down move. You'll definitely have a down move, maybe 20% or something like that in your account, the drawdown, but you shouldn't go bankrupt because of that. And that brings back things to to money management, whereas we know we shouldn't risk more than say 1% of our account per trade. So if we do have a loss like this one, it shouldn't be more than 1%. GBP versus the USD is trying to go upwards. So it's a bit of upbeat. It's been tired and just trading sideways for quite a long time. It's starting to see some action now. The dollar in general is doing a bit, definitely doing poorly. The reason for that is that we have the ISM figures out yesterday. So the ISM manufacturing printed 48.1 versus 49.2 projected, and also slightly lower than the 48.3 in prior month. And what we've seen is that we've seen Chinese PMIs going upwards. We've seen some stabilization in Europe. We've seen some stabilization in the market PMI, which is another survey and done in the US. But we haven't necessarily seen, we didn't see that in the data yesterday, and I think that scared some people off, and that's why they sold $100. But if you look at various reports, they still indicate that the US economy or the PMI manufacturing sector should probably bottom out over the next few months. Anyway, people selling a bit of dollars, that's the effect of it. Is it going to be enough to change the trend? I'm not really sure about that, because if the data is really bad in the US and the US is going to do bad, it's unlikely that the rest of the world is not going to be affected. There's this old saying, which is that when the US sneezes, the rest of the world catches cold, because the US is as you know, it's a big importer and effectively pretty much one of the world's biggest economy. Depending on the number you look at it, the Chinese is sometimes bigger, sometimes the US one is bigger. But yeah, they're so important, both the US and Chinese economy, but the US here in particular, So if things are really going bad over there, then you know, why should the Aussie dollar gain? Why should the New Zealand dollar gain? That doesn't add up, if it makes any sense. So what I think is that it's a short-term move. Obviously, we need to respect the levels. So in case of the EURUSD, if it does trade on the other side, yeah, it'll go a bit up higher, right? But we need to, again, respect the levels for now, and the trend is bearish. In the case of GBP, USD is trading sideways, and it's trying to break upwards. What's quite interesting is you can treat this like a head, left, and right shoulder. And we're having that break right now, but my preference is the October high at 130.17. Now, we have an election coming up on Thursday next week. So if you're just in and out, that sort of person, then obviously breaks the upside, goes up a bit, you can probably trade the upside by a bit, but then eventually, probably a very good idea to close this out if you want to do anything like that, just ahead of the election. As well, because it is election, what sometimes happens is that we go up, we trigger a bunch of stop levels, so it looks like we're going upwards, and then because the big guys are not committed, there's no follow through here. So there's huge risks with trying to buy a breakout here, but it is there. It's available if you want to trade it. Dollar versus the Japanese yen. Now, I was looking at my charts yesterday, and I look at the economic data, and I think personally, I think it's the beginning of a rollover in stock markets. And let me show you this. This is the German DAX. So the German DAX. We'll go back to the dollar yen in a minute. So this is a 6-hour chart in the German DAX. So you know, I've been bullish, right? I've been bullish for quite some time in this market. We had a few setups. It all went good. We went all the way to the highs, and then when I said yesterday we wanted to do two things. You can just look up yesterday's video if you don't remember. I said if we take out this high, if it goes up and we close, and then we buy on a dip. Alternatively, we'll just do like that. And that's what happened, and this was the key level here. I said as well that I was not really confident in that view, but these are the two options. That line here was really important, and this did help, and we did slide. Now today, I think we can obviously go up a bit. That would not surprise me. Whoop, wrong thing. And we can easily go up a bit, right? We can go up and then down. Let me just try something here. There we go. Maybe 50% correction of the move or something like that, and then I think lower like that. And I personally think that the better option to buy, if you really want to be a buyer in this market, is to buy down here. Because down here you have that upward sloping trend line, and so maybe down here becomes more interesting. And I think, because if you look at other markets like European in particular, I think it's gonna translate into US weakness, and we did see some weaknesses in the S&P yesterday as well. I mean, this is a very sharp drop, guys. This one here, very sharp drop. And as you know, I have my little pitchforks, and the pitchfork sort of tells us the price action over the last few months, or actually the full year, and pretty much. And we are at the extreme levels if we saw here in June, July, and in May. And I wouldn't really, well, what's a high here as well. The key point is that this trend line has acted as resistance is 1, 2, 3, 4, 5, maybe for the 6th time now. So I'm looking for some sort of a reversal here. Now the technicals though, the short term, which is what you're looking at here, remains bullish in the S&P. So it's actually okay to buy here with stops below. I said the same when we're trading here. Buy here first to go upwards, and I'm going to stick with that because the blue charts, the short-term systems I have here, they're trend following, and they will stick with the trend until proven otherwise. But what I'm trying to tell you here is that the German DAX is bearish. This one is reversing from higher levels and remains bullish for yet another day, but we're starting to see cracks in this very bullish move in the stock markets, and that's a bit of a warning sign. And it's also a bit of a warning sign for something like the dollar yen, which I know I said this is the buy zone, and we're exactly at the buy zone, and you can take this position if you want to. Just need to be aware of the things are brewing, I think, underneath the surface, and I think we need to be a bit more careful here as well. What's quite interesting is this. So this is that inverse head and shoulders, right? you see we have head, left, right shoulder, and we talked about the bullish breakout here already. Actually, we talked about the bullish breakout here. That did not work out. I mean, in a sense that a good breakout is like like the S&P. Do you remember the breakout here? I said break to the upside and probably gonna go upwards. It did go out, it stayed here, and then it slowly moved upwards. That's a nice, sweet little breakout. In the dollar yen, you have an attempt to break up and then plummet, and then it goes up, trades above the highs again, and then slowly goes down, and then again another attempt to break upwards. But it's definitely still bullish, but the momentum is not really great, is it? So need to be a bit careful here, I think. And I find it a bit surprising as well. Like, I understand that there's some positioning, maybe end of year positioning or something like that, the New Zealand dollar, and also Aussie dollar, of course, because they had a rate meeting overnight, and you've seen some decent gains in the Aussie dollar, right? So maybe it's just people getting out because they're literally too bearish, but now the market is not as bearish as they wanted to. And here as well as the New Zealand dollar versus the USD, which had an inverse and shoulders with the head, left, right, and then that break gives you upside. But I think in the longer run, I still think eventually we'll go lower, and at one point we probably just need to sell at higher levels, because I think it's unrealistic to assume that New Zealand dollar versus the USD is gonna go much higher. Like, I would be very surprised if it trades up to something like 68, 69, if stock markets indeed roll over, which is what I'm suspecting. So what can we do? Well, with the bluish levels and the short-term levels I'm sharing with you guys here, we just stick with the trends until proven otherwise, as I mentioned before. But it's important to keep the other things in mind when there's some inconsistency here, like with the New Zealand dollar versus the USD, which might actually potentially turn into a very good shorting opportunity at one point. But for now, as you can see, it's literally on fire. It's doing really, really good. And it's not just here. It's a not funny currencies, but small currencies like Euro Swedish kroner is doing really well. South African rand is doing really well. And again, it's a little bit inconsistent to me, I think, given what's going on with the DAX and might happen with the US stock markets. Maybe I'm just ahead of myself as well. Okay, let's see if you guys have any questions. So we got a question here from Ashu. I hope I pronounced that correctly. Please tell me about the Euro New Zealand dollar. Okay, so Euro New Zealand dollar, I think is going to go lower. I had an idea for this one. Let's see if I can pull it up. I use several charts to understand the different trends. So you have the short-term system that I share with you guys here, and then I have the breakout charts, and then I have my swing trade charts. And what's happening here is quite interesting. This is Euro New Zealand dollars. The price was here at 71.10, and the market should have bounced from 71.10. And there wouldn't be nothing wrong with buying a bit of Euro New Zealand dollar here with the stop loss just below, especially as in dollar New Zealand dollar we had a similar situation. But you can see here the price took out that trend line and it's now going down, down, down. So what's happening here is that you're seeing all these small currencies catching up, I think, with stock markets, which are really, really bullish. And suddenly everybody starts to get more enthusiastic and they're buying. Now, according to this, we definitely oversold on the RSI, but according to the pitchfork system, we still have a bit more to go. So we could probably trade it down to 68.24, and down here potentially you might be able to see a bit of a bounce like we did here. And in the very short term, like this is your 1 hour chart. If we put some short term levels here, well, as long as you trade below something like 70, actually let's flip to the 4 hour. As long as you trade below something like I think 71, this is going to be a bearish market. And if you do want to sell, I think you need to allow this to go up a bit, maybe to 70, 30, 70, 50, and then attack the lows. but it looks to me more New Zealand dollar strength. This is also supported by this, which is another pitchfork on the New Zealand dollar, but against the US dollar. So you can see here that it wouldn't have been wrong to sell at 64.35 with a stop loss at 64.69, because effectively you would have been selling here and then attack the low. The first target would have given you a 3 times risk reward ratio. Second target would have given you a 4.7 risk reward ratio. But now it's clearly really bullish, and again it might pull back a bit, and then people probably gonna buy, and then we're realistically looking to sell at 66.23, somewhere up here. And when this is at the high and when your New Zealand dollar is at the lows, then that's probably a good idea, and we're still, the way it looks like, a few more days away from that. Okay, we don't have any more questions, so we're gonna wrap things up. Guys, thanks so much for watching. If you do have any questions or wanna reach out to me or want to be added to my distribution list, then I'll send you my Twitter. I also do have a WhatsApp feed, so send you the WhatsApp feed. I'm a bit bad with sending messages. Not every day will I send you the video, but if you click on that on your mobile phones, you'll get you'll be able to send me a message which says add me, and I'll add you to the system. You just need to remember to say my phone number. I'm also available on ATFX00 as well. That's on Twitter, by the way. That's the link for that as well. Don't forget to check out the homepage here on Investing Cube. One of the analysts is out sick today, so we definitely have less content than usual, but we do produce content here, and I'm going to be joining the guys soon to produce more content. In the afternoon as well, we have Inno that joins us and publishes much more content, so don't forget to check this out. It's just today one of the writers is out sick, so they'll be back tomorrow hopefully. That's why we have a bit less content. Okay, guys, thanks for watching, and don't forget to subscribe to the videos, and don't forget to like them. Have a good day, and I'll see you guys tomorrow, same time here on the ATFX YouTube channel and on investingcube.com. Thank you, and bye-bye. Thank you. Cheers.